Hello, I'm Greg Gille, the editor of Unquote, and we're here on the last day of the IPEM conference in Cannes today. It is my pleasure to be joined by Johanna Barr from Advent International. Thank you very much for taking the time to be with us today and sharing your insights into, well, your panel was around the do's and don'ts of a fund pitch, which was a very fun way to sort of start the day. Obviously a lot of rich anecdotes and a very entertaining panel, but also quite a lot of real takeaways and things to bear in mind, real insight there, which was really good. So you made a particular point around, I think, tailoring your pitch to the type of LP that you're meeting, and especially around family offices, which I thought was quite interesting. Can you tell us a bit more about that?
Yeah, I mean, ultimately, when you go into a meeting, you should just always know who you're meeting and maybe what their portfolio looks like and their thoughts on portfolio construction ahead of going into a meeting. I think the point I made around family offices is that oftentimes family offices are staffed much smaller, and as a result, the people you'll be meeting, they're very experienced, but they're oftentimes experienced across asset classes, and will also have the remit of investing not just the private equity portfolio, but at the same time real estate, infrastructure, and maybe even the public side. And for them, it's sort of a best returns approach. So they will benchmark private equity and your fund against all the other asset classes at the same time and make investment decisions around that. So you just need to go in being aware of that one thing, and then also being able to have a more general discussion around the dynamics between the asset classes and how private equity fits into that.
It's interesting. So it's almost more sophistication that you would perhaps expect, where you sort of, it's not just about private equity, you need to
exactly.
broaden it.
You just need to, because you're seeing now trends, in particular, let's say, from the hedge fund industry, a lot of outflows into that, coming into private markets, and other trends similar to that you just need to be aware of. And so that can be a driving force, frankly, for potentially larger allocation to alternatives or to private equity in particular. And so just being aware of some of that, I think, is really helpful, and obviously you can use whatever trends you're seeing to your advantage in that particular meeting in pointing some of those dynamics out.
Absolutely. And something else as well, obviously you're being at Advent International, you're coming at it from a big brand perspective with a lot of history and obviously a focus on the sort of larger funds, larger transactions. I would imagine, and correct me if I'm wrong, I would imagine that most LPs that you'll come across will have their sort of their preconception or think they know what it is you do very well. How do you navigate that? I imagine it's a plus in certain situations, but perhaps you want to go beyond these preconceptions. How do you engage with them? How do you capture their attention?
Well, first of all, you're right. I think name recognition in the first instance is usually a good thing, right? So you don't have to explain too much who you are and what you do, but there is, you do still want to build a niche in the LP's mind around what you can do and how you can perform. From our perspective, it's often around maybe the preconception that larger fund sizes potentially mean not as strong a returns as maybe smaller funds. I think we've sort of up to now been able to prove otherwise and still deliver breakout performance in our funds in specific deals. And it's just really talking the LPs through how, in our case with a large platform, a global network, we use that to our advantage to still be able to deliver breakout performance.
Absolutely. And perhaps as a passing question, you spend a lot of time on the road with the Advent teams, and you've been doing this for a long time. Where do you see a lot of untapped opportunity in the LP space at the moment? I'm thinking in terms of geographies, in terms of LP types. Any big areas of focus for you at the moment?
Well, I think you've seen, if I take sort of the last 5 to 8 years even, obviously some newer names come into the market, in particular in Asia, where you have had new sovereign wealth funds entering the market, building out private equity allocations, or more broadly, building out their whole platform across all asset classes. So that's been an area of focus of ours, but not just us, I'm sure other GPs as well. But I think with that, our kind of Asian contribution, if you want, to our capital has probably gone up to around 20%. And I think that will be a continuing trend, in particular in larger markets like Japan, where you are seeing a move to being more comfortable with the private equity asset class, and I think that will lead to more allocation and ultimately commitments in that area. Other trends you're seeing is frankly with the investors who've done this for a long time, but who are in a sort of close to zero interest rate environment, feeling the pressure to allocate more to private equity, to allocate more to alternatives more generally, and we're the net beneficiary of that. So if a CIO says, to get my return threshold, whatever it is for my pension fund, I need to move from 8% to 10% allocation, that's a huge inflow for the asset class. And so I do think there's actually still quite a lot of growth to go. The other dynamic is that private equity has done pretty well for fund managers over the time. So, LPs have had net inflows over the last, call it 5 to 7 years. And only now, I think you're seeing maybe last year for some LPs the first year that they've actually had on a net basis an outflow, so they have been able to increase their allocation to the asset class. Up to then, despite their desire to increase it, it's actually been more difficult because they've had so much money back.
So still a lot of opportunity. You still see that progressing, and it's not the top of the wave for private equity just yet.
I mean, I guess I'm a glass half full type of person. Maybe I need to be that in my job, but I would say, in particular with the dynamics you also see in the public markets, public markets are still so large, and there is a lot of public companies who would probably prefer to be private. And so that's one theme that we've been working on, that the private equity industry as large has been working on. And so I think there is still a lot of opportunity to deploy the capital that we have.
Excellent. Well, thank you very much for stopping by. Pleasure to catch up.
Thank you for having me.
And thank you very much for watching.
Thank you.